Hey Noah, how important is your credit score?
I say 3 out of 10. It's important, but it's not the number one thing lenders look at. Whether you have a 680 credit score or 720 credit score, there's not going to be a huge difference on what your rate and your approval is going to be.
How important is your income?
8 out of 10. Not every program is going to be so strict on the income, but for first-time home buyers, for the majority of Americans that are buying houses, income and the ability to repay is going to be one of the biggest thing a lender looks at.
What about monthly debt?
6 out of 10. It's important, but on the lending side, there are a couple things that we can omit before someone gets to the closing table. For example, auto loans. If you only have 5 or 6 payments left on an auto loan, it's not going to affect you during the approval process.
What about my job history?
I'd say 7, and take that with a grain of salt because it's hard to say for every loan program, but for conventional loans, FHA loans, what most people use to buy their first or second house, job history is going to be pretty important. But as a broker, I am a little bit more flexible. I have approved people with 6 to 12 months of job history. Maybe they just got a 1099 or they just became self-employed. So there are some programs that can help with that, but it's pretty important.
How important are my bank statements?
5 out of 10. They're important. There are some workarounds, but the lender's going to want to see where the down payment's coming from. Typically, they're going to need to see that money in your account 2 months before closing. Same thing with the earnest money. They're going to want to know where that came from.